Welcome to the vault.com. Peace. This is your host, Sharif Ali. Would like to welcome you to the vault.com. Welcome you to just an awesome day or night wherever you are in the world. Just want to thank you all for tuning in. You're listening to the voice of Sharif Ali on High Frequency Radio Network. We're going to be going over some very good topics tonight, particularly 100% private money, focused on making sure that you can pretty much maintain your privacy and build equity and build money up. So really excited. Want to start out as we always do, thanking the ancestors, thanking the creator, always thanking my mom, my father, and my grandparents for helping me be the man that I am, to put me in a position I am to come out and do what is it that I do best, which is help our people out. Want to come out and say thank you tonight to all the live listeners. Whether you're listening live through YouTube or whether you're listening live through Facebook, always excited. Anybody that's even listening live through Blog Talk, just really thankful for you all listening live. It's always appreciated and welcome. So thank you all for tuning in live. I want to thank everybody that listens to this in the archives. I know a lot of people may not have the time and the schedule, but it's always good to have people in the private that are able to go back and listen and share with their friends and family. Anybody that does share, thank you all. So if you all want to chat with me on tonight, you can call 424-222-5250, and you all can press 1, or I have the chat live on YouTube tonight, so you all can just go directly to the page, the live link that was displayed on Facebook, and you all can chat with me live there. We'll be taking questions on the second half of the show, but for right now, we're going to be doing live, just going in. I actually do have a special guest tonight, so I'm actually really kind of excited for you all. I think that you all will be really excited about one of my private wealth strategists that I work with. I say, hey, let's just go ahead and have a good conversation because he is the private wealth strategist for the topic that we're talking about tonight, which is 100% private money. So just want to go ahead and thank everybody for listening to archives. Thank everybody that's ever, got a consultation. Anybody that is looking to get a consultation privately, you can contact me at hfrn.vault@gmail.com. Once again, hfrn.vault@gmail.com. And, my services are private. I do this as a form of charity for my brothers and sisters, of African indigenous descent. But I know that there's a lot of people in the world that need this type of help, maintaining their privacy and owning nothing and controlling everything. So I am excited about helping brothers and sisters in particular to grow their wealth in their states, knowing that they've been in the land for a while now and they don't have the proper structure. And so my show, The Vault, is all about making sure that you have the right proper structure when you're doing business. Everybody's been tricked into thinking that they need to own everything, but owning everything means you incur the liability for everything. So we're going to go from there, but I do want to make you all abreast that we do have an event coming up here in Jersey, actually the 24th of June, which is 2017, which is coming up this weekend. We will be cutting off tickets. There will not be tickets sold at the door. We don't run those type of events. We do private events. They're RSVP only. So if you would like a RSVP to the event, please RSVP at hfrn.vault@gmail.com. And in turn, we'll send you a RSVP. For everyone that's actually gotten their RSVP, you all need to check your spam or check your junk mail. They say sometime that the RSVPs go to the junk mail or spam, so the Eventbrites go there. So you need to kind of check that for yourself and not say that we didn't send it to you, because we do want you to learn and invest in your private education. So that's very important, is investing in your private education. We do have a great lineup of speakers. We do have quite a few associates that I will be featuring there. And the best part about it is that we're all private. All of us are looking to maintain our privacy, but one of the main speakers, our special guest speaker this event, will be Taj Tariq Bey. He has a huge YouTube following for just helping brothers and sisters have a good knowledge base of themselves and who they are, and what is it that they need to know about themselves. I know that there's like an identity crisis for African indigenous descent people in the United States, and we kind of need to move past that. But on the back end of that, it's really about making sure that your status as an individual is correct, and in turn, you have to be in a good position. And that means you need to know some things. So we're going to be going over those things, but we're going to be definitely talking about trust and the charities as far as your foundations. And we're going to be talking about, even some of the things that we're going to be talking about tonight, which is this whole 100% private money thing. And, we're going to go forward from there. So let's talk about this private money situation. I'm going to share with you all really quickly how 100% private money looks when it comes to the Rothschilds, the Morgans, the Rockefellers. A lot of individuals say that these are Jewish people. We should not be mad at Jewish people for one simple reason. These people have made it a point to be the best at everything. So we have a choice as a people. Are we going to be the best at everything? Because they've made it a point to be the best at everything. We take our money to them. So we should be taking our money to ourselves. And the way that we're going to do that is becoming the best at everything other than shooting a basketball or being an entertainer. So the way that we do that is we do have to get into contracts, because even those athletes and those movie stars are running off of contracts. Contracts are the law that's private. Contract law is private law, brothers and sisters. I have to keep emphasizing this to you so you can understand how your money can be 100% private. It's all about jurisdiction. Why is it about jurisdiction? Because where you're generating your money is where you'll be liable for it. We practice the philosophy of own nothing, control everything. That means that you need to have trust in place. Why? Because trust are what? Contracts. I have to keep mentioning this because everyone has been taught to own everything. When you understand that you're meant to have a contract in place, which is a trust, and a trust is a legal person. I was talking to a banker the other day, and I said to him, we were talking, and I said, a trust is a legal person. He said, yeah. And I was saying, a trust can do everything you could do. He said, yeah, within reason. I was like, yeah, the only thing a trust can't do is it can't vote. That's all it can't do. But it can buy, sell, and hold property. So that means that you have to be in a position where your trust are private trust. There's two types of trust, brothers and sisters. There's public trust and there's private trust. I always share on the show that trust are contracts that are given down through families. Families are what utilize contracts. Private families, private communities. So when you all are looking to say, how do I administer a trust privately, or how do I generate 100% money, private money, you have to have contracts in place. You have to be in the proper jurisdiction. That means you're in a private capacity, not in a public capacity. That's very, very important. When you see the Rothschilds, when you see the Morgans, when you see the Rockefellers, those are all private families. When you go look at the Bill and Melinda Gates Foundation, that is a private charity. See how wealthy people focus on their privacy first? They don't just say, let me go out and generate wealth. When you go look at, you all can look this up. You can go look this up for what is that? Oh my gosh, not a brain freeze. When you guys go look up the Uniform Trust Law inside of the United States, it's called the Uniform Trust Law. It says that trusts are used as vehicles for wealth generation. What are you using? Why are you using a social security number if a trust is used for wealth generation? Are you going to be poor? Are you meant to be poor? A trust is utilized for wealth generation. And when you understand how these entities work, these individuals are doing wealth generation and building it tax-free. You heard Donald Trump say he doesn't pay taxes. There's no politician paying taxes. They're all using blind trust, B-L-I-N-D, a blind trust. You can go look that up. They're all utilizing blind trust. So when you say, oh, wow, it's unfortunate. These individuals are telling us that, that he doesn't have to pay taxes. He doesn't have to release his tax records. Why would he? His money is private. He doesn't own it. He controls it. There's a difference. He has his money in a proper jurisdiction. That's why you should get to the event on the 24th. Because you need to be able to be in an environment where you can be around private families, and not only that, a private community. Because this information is passed along through private communities. It's not passed along in the public. They will not let a liability, someone that wants to own everything, be in their midst. You're a liability. So you have to be in a position where you are willing to sign a non-disclosure agreement So for all the brothers and sisters that email me for that, just know that I'm building up because I have quite a few contracts that I want to send to you all. And you all have to get in a position where the government can't pierce your contract. Why? I've educated individuals on the show that Article 1, Section 10 of the United States Constitution says no state can impair the obligation of contracts. No state can abridge the right to contracts. They can't take your right to contract. You have the right to contract unlimited. That means you can create contracts. That's what wealthy people use. They use contracts. They use trust because a trust is a contract. That's why it's a tool for wealth generation. And they're utilizing those things once again to do it tax-free. The Morgans have lived for over 100 years now. Do you think any of their children are working? No, they solved that situation the first generation. How many generations are your children going to work? And your children's children, and your children's children. And if you don't plan on having children, so be it. But there are some people, when you get into the information of 100% private money, they're focused on making sure their children never have to work a day of their life, making sure that they have it better than them. They say a good man leaves his children an inheritance. Well, guess what? In 1917, they put an inheritance tax in the code, in the IRS code. But guess what? Wealthy people were using trust. They never owned it. So when you die and you have everything in your name, guess what? You're going to go through probate and intestate. That means the state has to take over your estate because everybody's born with an estate. You're born wealthy, brothers and sisters. You have to put yourself in a position where you can pass wealth on tax-free, which is legal. No state's going to abridge the right to contract. So while wealthy people had trust in place in the 1960s, 1916, 1917, everybody else was getting a social security number at that time, utilizing social security numbers so they can become a welfare recipient. Brothers and sisters, it's time to change our mindset. It's time to own nothing, control everything. That's how these bankers are controlling your life. I pointed out on the show how the Rockefellers have control of most of the corporations in the United States. That's why when you hear politicians and people in the public say, well, the private sector is doing this and the private sector is doing that. Well, what does the private sector really look like? Who's in the private sector? Wealthy people are utilizing contracts in the private sector. I'm not talking about the basketball players that are making $60 million, their little $20 million contracts. Those individuals are public individuals. Once again, this is 100% private money. So how do you generate money privately? We have to understand first you have to have a contract in place. You have to own nothing. You're not just going to say, okay, I'm going to generate wealth and I'm going to be able to do it privately. Let me tell you how wealthy people operate. Wealthy people operate and say, you know what? We understand what real money is. Real money is gold and silver. That's private money. There's nothing about it that you have to report. Nothing. It's written into the same, the same article that we paraphrase for the right of contract. The right of contract says, guess what, brothers and sisters? You can utilize Article 1, Section 10, and inside of Article 1, Section 10, it says you are to use gold and silver for the tender of payment. And the IRS actually accepts gold and silver as form of legal tender. Even though in the public, you're not paying for anything with gold and silver. But the IRS accepts it for a tax liability. You can go look that up. That's called private money. Why do you think the banks are holding gold and silver while they give you Federal Reserve notes? Because the Federal Reserve notes are in their jurisdiction, the public's jurisdiction. Gold and silver is not. And it depends on what gold and silver you have. Because in 1933, the United States said that they were bankrupt, which they still are. That's why you see them operating in the red rate now. Because they're going through a Chapter 11. So you can see that these individuals are able to use private money still, so they can stay solvent and be able to do business internationally. They're holding gold and silver on their books as private money. So when individuals say, "Let me invest in Bitcoin, let me invest in these different type of investments," that's not private money. That's public. The internet is public. Everything about it is public. That's why it's called the World Wide Web. You have a choice on what you put on that public platform. The social networks are public platforms. So once again, brothers and sisters, let's talk about this private funds, this private money tonight. What does this private money look like? How can we use it as a private banking situation? Because when you're in the private, you start creating a private banking situation. That's why you see these things called bank and trust. Did you forget? When you go look at your insurance policies, they're held in trust. When you go look at your bank, the bank is held as a trust. It's held through a contract. Contract makes the law. The contract says it can be utilized to issue securities. It can be utilized to issue transmitting utilities. It can be utilized to issue promissory notes. Don't banks issue promissory notes for mortgages? How do you get into that position of being in a private banking situation? You might want to hold gold and silver like the banks do. If you guys want to find out specifically what type of gold and silver, I encourage you all to get to our events, brothers and sisters. There's certain levels of information that we need to hold and reserve in the private, because don't think that the public's not going to change laws for public individuals. They're not going to change the laws privately for them. There is no law governing the private. The law that's governing private is contracts, and contract makes the law. They're not going to change the law for themselves. They're going to change it for their public citizens. That's what they're going to change it for, and that's what they did, because it's all about jurisdiction. So the Rothschilds, Morgans, and Rockefellers are saying, hey, look, how do you become a bank? You have to have a contract in place. It has to be some form of a trust in place. That's why they call it bank and trust. You go look at the Rothschilds, and you'll look at the Morgans. You go look at the banks. The banks are trust. They're held in trust. They're contracts. So now that we know that they're held in that entity first, you're not just going to go out and say, okay, I'm going to go and I'm going to start generating wealth privately, off the raw strength of, the fact that I'm private. It doesn't work that way. And then second of all, how are you going to be able to get a full education on the information if you're not educated by a private family or a private community? I don't get it. What's wrong with our people? Are we that uneducated that we don't want to get educated? You got to educate yourself. You can't think that you're going to raw dog it on public information, on public platforms. You think you're going to get all the information through YouTube? Have fun. Private people look at people in the public as liabilities because they own everything and they control nothing. Whereas private people own nothing and they control everything. Don't get mad at the Rothschilds and the Morgans and the Rockefellers. It's time for you to put yourself in a position to own nothing, control everything through contracts. Just like your Social Security number is a trust. You hear about it all the time. Social Security Administration trust. Social Security trust. Why are you being fooled by it? Because you've been given a public education. It's time to put yourself in a position where you have a private education. And guess what? Private law, let me give you two subsets of private law. Contract law and family law. When you think your families are supposed to go in court, that's because you went into the public side of it. Remember, there's two types of contracts. There's two types of trust. It's a public trust and a private trust. So, family law is private law. That's why they still honor common law contracts for marriages. That's private. The state doesn't need to be involved in that. But individuals want to go get a license to practice marriage. And that's why the marriage and the divorce rate is what it is in the United States right now. So let's move forward, brothers and sisters. What's this private money look like? How are they set up? I'm going to bring in my guest tonight. I know that we have a guest and we're going to be bringing him in. I'm going to see if this is him right here. And we're going to move forward because I really want to educate you all. Brother Douglas, are you there? I'm doing well. I'm doing perfectly well, man. I definitely am thankful that we're able to go live right now. I just thought about it, actually. The YouTube audience might have a hard time listening, so I got to figure out how I can do it. But I'm gonna figure it out here and see if we can keep it moving. But But at the end of the day, I'm definitely excited that we can bring it. If we do, we can always redo another episode, because I know that it's important for our brothers and sisters to actually learn this private information, and I really do want to give it to them the best way possible. So, how you doing today? Awesome. Thank you. Thank you. Thank you. We definitely, I want to make sure everything is right. My YouTube audience might be a little upset with us tonight, but just know that everybody on YouTube, we will definitely make sure that the recording is properly uploaded to where you all can hear it, and hear it appropriately, because I do want you all to hear what is it that's going on, and things of that nature. So, um, yeah, we're gonna move forward from there. Yeah, someone said maybe I have to use the speaker, so we're gonna work this out, Douglas. So we'll do that 100%. Um, but Douglas, I definitely want you to introduce yourself, and we can go from there as far as who you are. Douglas, like I say, everybody is somebody that I confide in as far as private wealth strategies, and look forward to building with him, and just someone that we can deal with on that level that understands how private wealth and wealth is generated privately. So, Douglas, if you like to introduce yourself, feel free.
Yeah, definitely, man. Thank you for that, man. I'm Douglas Eze. I've been in the financial service industry 20 years. I started when I was 24 years old, waiting table at IHOP, and got introduced to this business in the financial arena. I worked with a lot of different companies, and then finally, in 1999, I decided to form my own company called Lago Financial because I just got sick and tired of just doing the same stuff that a lot of financial advisors do, which is just educate people on where to put their money in the aspect of programs that are regulated by the federal government, like, contributing to the 401k IRA. Those things are good, but you know what? At the end of the day, so many people have retired and they've retired broke, um, or they have to go back to work because one thing that they never told them was that money, a portion of that money is taxed, and so many people still don't realize that. And when we watch the politicians talk about they're going to tax the wealthy families, or I mean they're going to tax the wealthy. Most people are thinking they're talking about people like Warren Buffett and all these people. That's not who they're talking about. They're talking about you that is making a W-2 income because your income is going to be taxed income tax. So you're going to receive an income tax, especially when you retire. You're going to receive income, and you're going to receive, Social Security or whatever. And you're going to have to pay taxes on all that money coming in. So that's a situation that most people haven't addressed. And one thing that I've quickly said to myself was, you know what? I need to first start doing something differently where I help my clients find money in places that they're throwing money away unknowingly and unnecessarily. Like how they pay for their mortgage. Because a lot of people have been deceived about that. That the mortgage is an investment. It's a wealth creating tool. And well, we knew that was a lie in 2008 when the market crashed. So I show people how to make sure that they separate their equity from their home by structuring their houses properly, using it as a house, which is what it is. And then the other thing where I do is help you find money in your qualified retirement plan, like your IRA, 401k, because so many people put a lot of money in those accounts way above the match that their company is contributing. So that's a problem because all that money is going to be taxed once you retire. And then the other one is, how you pay taxes. How do we help you reduce the amount of taxes that you're paying? We're not saying don't pay tax. We're just saying, how about if you minimize the amount of tax that you're paying out? If you don't have to pay tax, then you could use that money and plan your future. Would that help you? And then the other thing we do is, how you spend money on capital purchases, like when you buy a car, when you make major purchase, and also how you spend for pay for your children's college education plan. So that's what I do, just help you find money in those places, so you don't have to ever worry about retiring broke. Because at the end of the day, when somebody tells you that you're gonna retire at a low tax bracket, that means basically what they're telling you is that you're gonna retire broke. because I want to be on the I want to pay be on the highest tax bracket possible when I retire. You know why? But doesn't mean at the end of the day the key is structuring yourself properly, making sure you uh, do what the law allows you to do, and plan your stuff properly. Put your account, your money in accounts that allow you to retire and take your money, access your money tax free. And there's accounts like that, and which is what we're going to talk about, which is the life insurance account, which is what I do.
Thank you, Douglas. Thank you. That is a great point, and I definitely appreciate that. And I definitely want to point out something about this whole life insurance thought process because I think a lot of people, when they think of this whole life insurance deal, they're like, well, I have life insurance policies, and I'm not sure about life insurance. Our people, we actually had some of the largest life insurance companies in the United States in the early 19 in the 20th, early 200s, like in the 1900s. Man, we were heavily invested in life insurance policies as an ethnic group. The only thing is when things happen to our culture, we kind of got away from those founding principles. But I want to just mention real quick that there's a thing called BOLI and COLI, which is bank owned life insurance, and COLI, which is corporate owned life insurance. And a lot of these Fortune 500 companies, that's why they're able to give these specific individuals that get these, CEOs get these large balloon payments. And I would like for you to kind of explain that. When you about BOLI and COLI, and how to structure that in a private structure such as a trust with your family, and starting a whole private banking scenario, if you could.
Yeah, definitely. A BOLI is called the definition is bank owned life insurance. So for your audience, if you want to Google that, it's just BOLI, bank owned life insurance, and it tells you right there. Once you on Google, it says, you know, um, let me pull it up real quick as we're speaking, and it allows you and it explains the definition on Investopedia. It says a bank-owned life insurance is a form of life insurance purchased by banks where the bank is the beneficiary and or owner. This form of insurance is a tax shelter for the administrating bank as it's a tax-free funding scheme for employee benefit. So what I normally do is I'll say, I'll use, Sharif, right there and say, hey, you bought you have a Sharif own life insurance is a form of life insurance purchased by you, where you pick your beneficiary and you also choose your owner. This form of insurance is a tax shelter for yourself. So I remove the name of the bank and you put your name on there as a tax-free funding scheme for your family. you know. So it's been around forever. I mean, of course, you could use your private life insurance contract. It works the same way. It's life insurance, what it is. Now, people will be wondering, how can a bank have life insurance? Very simple, because a bank is an entity, it's a business. And a life insurance is a form of, is an asset portfolio. And I'm talking about cash value life insurance. I'm not talking about term insurance because again, there's a lot of people run around and telling people to buy term and invest the difference. Well, term is okay. It's like you're renting. Okay, that's as long as you understand why you're getting it, then it's okay to do it. So if you just know it's a temporary situation. You're just buying it for 5 years, 10 years, 20 years, 30 years, and you're telling the insurance company that you're gonna die in that period. At the end of the term, you're going to pass away, but the insurance company is saying you're not going to die. So because they're saying you're not going to die, you're going to pay them all this money. At the end of the term period, it's over, just like you're renting an apartment. Now, cash value life insurance has been around forever, and they're saying, well, you give us your money, we're going to take your money and we're going to invest it. And we're going to give you a very nice interest rate on it, and you could borrow from it whenever you need the money. We'll loan you money from the account to use to do whatever it is you want to do with it. We don't care. And whenever you decide to pay us back, you pay us back. It don't matter. We're not going to report you to Equifax, TransUnion, or Experian. We're not going to let them know that you took money from us, which means it's a private. relationship between you and the insurance company. And in some states, if you go through a divorce, for all you single people that are looking to get married, it's a good way to protect that money you've worked so hard for. Because if you have money in your savings account or your regular traditional bank, it becomes community property. But your life insurance, it doesn't even show up in that. So
That's actually a great point right there, and I want to stay there for a second, which is a lot of people ask, well, I'm gonna. This is what our community's been taught, Douglas, and the public. They've been educated to go get bank accounts and save their money in bank accounts. The majority of people that are probably listening right now literally have their money in a bank account. They are generating money on a daily and a weekly basis, and they are literally putting their money in a bank account. Can you just talk about the importance of how when we talk about 100% private money, we're talking about taking the funds that you're currently generating and putting them into an insurance policy as a form of savings for an actual future capital investment, if you could.
yeah, definitely. I always share an example. I have a ton of videos on YouTube, and one thing that I share is this. I say, listen, you have the first thing you hear is you hear from people on TV. They tell you, or some financial advisors tell you, you need to put 6 months emergency money in an account. Okay, that's good advice. Okay, good. You put it in an account. Which account? Your savings account. So if you have an emergency, you could go grab it and do what you need to do. All right, sounds good. All right, so let's say you saved up 6 months emergency money, your 6 months salary, you were able to put it away, $60,000 in your bank. So it's in the savings account. What's the interest rate you're earning on it? Well, 0.1%. So people are upset about that. They're like, man, you know. And then you go to the same bank that you have $60,000 in your savings account, and you want a car loan because you want to buy a car for $20,000. You go to the same bank and they say, well, we're going to charge you 5% interest or 3% because that's just what we're going to charge you, or whatever, depending on your credit. It could be more. I know somebody that's paying 17% interest. So they come back and you like, man, I'm pissed off. Why I'm giving you 60? You have 60,000 on my money, but you're gonna charge me 15% or 7% interest rate for a car, and then you get upset and you take 20,000 out of your 60 because you don't know, and your money now drops to $40,000. And you take 20 and you just go pay cash because you heard some, you know, advisor told you, well, you need to pay cash for a car. You don't need to have a debt, and then you hurry up and pay cash and you're happy. And if I asked you how much money did you pay for the car, you said $20,000. I said no, you didn't pay 20,000. You paid 20,000 plus the interest you could have made on it. If you had your money in a private contract like an insurance company that would have been giving you the 5% average rate of return on it on your $60,000. So here's the difference. So you and a lot of people have good credit. They have 60,000 sitting in the bank, but they hate credit. They hate debt. So they don't want no interest. But then you give your bank your 60,000 to a bank with no problem. Now the bank takes your 60,000 and they loan it to somebody else immediately. They're using your money to make money. They loan it to somebody else on a credit card or different things, or even to buy a car, or they might even loan it to your own wife in your own house, your money, and still pay you 0.1. But every day, so many families are running to the bank to put money. So here's the flip with the insurance company. The insurance company is saying, give us your money. We're gonna first of all give you a death benefit. God forbid death happens. We're gonna pay your family a lump sum. Second, if you need money, we could loan you up to 80% of what you put in plus whatever the interest rate is that the money is earned on the money. And you're like, what? They could do that? Yeah. They'll loan you that. Now, of course, you got to build your policy up correctly, properly. And what I mean by that is this. There's a minimum payment that an insurance company says you need to pay for the policy. So if you're buying $100,000 coverage, let's say the minimum payment is $1,000 a year. Now, that $1,000, let's just say it's a term policy. I'm just using that number. It doesn't matter. So that means if you die, they pay $100,000 out that day, that year, whatever. Now, but then there's a maximum that the coverage to 200,000. If you want to put 20,000 in, you need to increase your coverage. So it's determined by the amount of money you put in determines the maximum. So the same $1,000, out of that $1,000, the insurance company would take $400 of that money to pay for your life insurance of 100,000. So you're left with $600. So it's not an apple to apple comparison. The problem with so many people is like they put in $1,000 into an insurance policy and they want to see $1,000 profit. No, you have a death benefit. And they start comparing to their bank and to the stock market. Well, I'm making money in the stock market. If I put $1,000 here, I'm getting interest. Well, you're also paying taxes, and you don't have a death benefit. If you died, your family is only getting that $1,000 that you put in with the bank. With the insurance, you're getting $1,000 plus the death benefit. Now, the insurance company says, okay, this is what we're going to do. We're going to take $400 of that to pay for the $100,000 coverage. Now you're giving us, you have an extra $600 left. We're going to apply interest to that. So they give you, 5% interest or whatever the case is, depending on the kind of plan you have. They put 5% on that $600. Now remember, the IRS also says there's a maximum that you need to put in. Now, here's the funny thing, Sharif. They didn't do that till 1980. Now, you said insurance been around since the 1900s, actually since 1800. So it wasn't until 1980 that the IRS decided to put a cap on how much somebody would put into life insurance. Why would they put a cap to it? Well, because they realized that folks are taking advantage of all the tax benefit because the wealthy has been using it forever. And of course, the IRS is a collection agency, so they're in the business to collect money. So they decided to start saying, okay, if you put in into your life insurance more than the maximum that we tell you to put in, we're going to treat it like an IRA, like a 401k, like a 403b. Really? That means if any cash that you build up, we're going to now tax it because you decided to put more than the maximum in. So in the example I was using, if this person says, well, I want to do $5,000 as my maximum, and the $1,000 is their minimum. So now they're putting in 5 grand. Remember, $400 is going towards the life insurance. So you have about $4,600 that's in interest. Now it becomes your own private bank account. Now, unfortunately, a lot of life insurance agents don't understand how to sell it properly because all they're focused on is on their commission. And guess where their commission is? Their commission is only on the minimum, not on the maximum. So they never talk about the maximum. They only talk about the minimum. So that's why the education has been missed by so many.
Do you think that the information to a degree, and like you say, even with public insurance agents, like you say, they're not going to get paid off of the policy based off of the max? And do you think it's partially just because they're unaware, and business people, they don't know about setting these situations up as private banking situations, and it's not beneficial to actually do that because they're almost unaware of it?
Well, some of them, I mean, the thing is, it depends on how much you're willing to learn in any skill that you're doing, any business you do. You got to be a student of the business. If you just choose to listen to wherever somebody says and you don't do your own research, then, you fall and do what they tell you. I chose to understand what the wealthy families are doing, and how they, lead. And most people just do what it is that whoever is sitting in front of them or the trainer, the manager is telling them to do. Of course, again, they're not going to tell you the maximum because a lot of them don't understand it. Only a few agents in the country understand how maximum life insurance is, and it's been around since the 1800s. It's nothing new. It's not something that we created yesterday. It's been around since the 1800s. I mean, people like J.C. Penney. Some of you know that store. When the stock market crashed in 1928, he did what? He took his money from his life insurance to save his company. He had a $3 million life insurance contract, and he was able to pull cash from it to save his company. McDonald's, Ray Kroc, for the first 7 years in his business, he couldn't pay himself a salary. He did what? He took his life insurance policy, was taking cash from it to pay his employees for 7 years. You know, Disney World. Everybody go there for they take their children there. They spend thousands and millions of dollars over there. Well, when he started that company, no bank, the banks didn't want to loan him any money. They like, no, we're not gonna give you any money. Guess what he did? He took $100,000 back then to start Disney World. Look at that. $100,000. That's a club place you all go to. Look at what they own almost all of Florida because of how powerful they do all the movies. I mean, he invested $100,000 from his life insurance company. Policy to do that. That's how powerful life insurance is. So when we teach that, we teach you the proper way to use it to do the things that you're doing. Today's world, I use my life insurance for everything. I don't have a savings account in a bank for what? Why do I need one? Where the bank, I hate when somebody insults me with a savings account. When I walk into a bank and you want to slap me and insult me with a 0.1% interest rate, that's an insult. So I don't put my money with the bank. The only account I have with them is a checking account to pay my bills. That's it. Money is sitting saving in life insurance for my retirement, for all that. I don't need to put money in an IRA. Why would you tell me? Why would I need to put in $5,500 a year, and then you think I'll tax me? And if I need to take money, are you gonna penalize me for it? That's crazy. But so many people run to that to put their money in. So I just choose to do differently from everybody else.
That's a great point, Douglas. Thank you for sharing that point. And I know that there's probably a lot of information that you're saying right now that is probably unaccustomed to the average listener. And I think that it's just so important and so powerful. I think you went through numbers. I know people's mind probably, you probably lose people even with numbers, man. But I think that is so important for people to just be on the same page with understanding that there is a different strategy, and the way wealth is truly generated is generated privately. It's not generated publicly. The public facades that people are out there portraying is it's just something that they are unaware. Coming from the mentor, that's controlled knowledge. Whereas in the private, there's a structure that needs to be in place first, as you are well aware. Through contracts and trust and things of that nature. And even I would love to. I'm gonna save this for another day, which is the endowments. Even just talking about utilizing the policies for endowments. But I would like for you to speak real briefly on just given another scenario where individuals can utilize, whether it's with a trust to protect their assets, but also using the insurance policy to possibly fund them going out and purchasing a home, and or utilizing it to refinance and possibly purchase additional properties outside of the property that they own, because a lot of people, they do have mortgages, and not only do they have mortgages, a lot of people are looking to actually purchase a home, and the main thing is their credit score. Their credit sucks. Their credit sucks, and they're so annoyed by the whole Equifax and Equifax and all these other different people, TransUnion, and they don't want to deal with the whole credit score issue. They don't want to take the time to repair their credit. They don't have the best credit score. But we also know that these policies can be utilized once again as a banking scenario where you save to a degree, and you're able to pull out the finance that you need and utilize it as your own banking situation.
Well, that's interesting because one, so many people, have credit issues, and I understand. You have a situation. One thing you gotta realize, America is a credit country. I'm from Africa. I came here, and I had to understand the credit system. I didn't know what the credit system is. We don't have credit in Africa now. They're trying to introduce that stuff, which would be a great thing because people pay cash for everything in Africa. When growing up in Nigeria, we pay cash. You rent an apartment, you gotta pay 2 years up front rent. It's not like monthly. You gotta pay 2 years. Here, they run your credit and they say, well, pay us every month. You want to buy a house in Nigeria, you gotta pay cash. So you gotta save that money up. If you want to buy a $300,000 house, you gotta save it up and pay cash for it. Here in America, you go to the bank and they say, well, you know what? Just we'll use your credit. You have a great credit. We'll give you $300,000 to buy the house. That's a beautiful thing. Now, you got to understand the credit system and use it to your advantage. Stop running away from it. Don't use your credit to go start shopping and buying designer stuff and ruin your life. Use it wisely. Now, on the flip side, if you have bad credit, well, do you have cash? Do you have money? If you do have money, then guess what? You need to now leverage life insurance for that. What do I mean by that? By putting your money in a life insurance contract. Well, you got to put a lot of money in it because you don't have credit, and you're saying, well, I want to pay $100,000 for a house. Everything requires planning. So, of course, you're not going to put in $5,000 in life insurance expect for them to give you $100,000 cash. It doesn't work that way. You got to build it up. And I'll give you an example. I opened up a medical practice in 2011. After I got married in 2010, in 2011, I opened up a medical practice for my, right now it's an ex, but back then, I mean, we're married, so I did it for her. But where did I get the money from? I got it from my life insurance contract. How did I do it? Well, I've had life insurance since because I've been in business 20 years. So I've been putting money in life insurance, saving. I started with $150, started a month, and then I increased it to $500, and today I'm doing a whole lot more. But in fast forward 2011, we wanted to start a business. Well, even before that, I'll give you a list. In 2003, before I was still young, and I went to a timeshare presentation, and they sold me a timeshare in Bahamas or some nonsense that I didn't never use, but after a while, I realized, man, this is a waste of money. I tried to negotiate. They didn't want to do it. I say, you know what? Let me do Donald Trump system, and I filed for bankruptcy. Well, I didn't know the credit game, so that jacked me up, and I had to wait because I filed a Chapter 7, so that, and just for the judgment they put a judgment on my thing, and then I had to file bankruptcy to get rid of everything. So that stayed with me, and I said, you know what, this is time for me to learn this credit system because this is crazy. So I took the time, I started learning how to build credit and do what I need to do to get myself back up. And then with my life insurance, I started using my life insurance to rebuild my credit. I started using it to buy, I'll buy stuff with a charge card because before I filed for bankruptcy, I applied for a credit card, and I didn't add because you could choose what you put in the bankruptcy. You don't have to put everything in it. But of course, once you file it, it's going to be on your, but you kept the credit card or whatever it is. So I'll buy and I'll put money, I'll pay it back and do what I need to do. And fast forward 2011, my credit was back up to, because it's over 7 years, so the bankruptcy is off. But, I wanted to start a business. And for my ex-wife now, a medical practice. And I didn't want to, the bank didn't want to give no money. So what we do, I had the money sitting in my life insurance contract. So I was able to borrow $150,000 from the insurance company. See, the key is I borrowed it from the insurance company. I didn't borrow it from myself. So a lot of people think you're taking the money from yourself. No, you're taking the money from the insurance company. The insurance company is the bank. The insurance company now says, Douglas, this is what we're going to do. We won't give you the 150,000 because we know you have it in your account. We won't let you continue to leave your money. Use your account as collateral to get our money. We don't need to see any paperwork. We don't need to see any profit and loss. We don't need to see a business plan. We're going to give you our $150,000 against the $200,000 cash that you have in your policy. So you don't have to take 150,000 to go pay cash for this property. We'll give you our 150,000, and they give me their 150,000 while my 200 continues to earn compounding interest, growing. And I started the medical practice, and boom, you know, we have a clinic. So those are the things that you can do with life insurance.
Thank you, Douglas, for pointing that out. I think a lot of people come into those hurdles looking to get business funding on any level. You know, it just shows the power of the policies when you can pull out $150,000, knowing that the value is even a lot greater than that, but just the amount of money that you needed to actually start the medical practice. I think a lot of people's dreams, as far as businesses, may not even be 150, and they can see the flexibility, the opportunity, to actually do those things. So I definitely appreciate you pointing out that personal story. About how policies actually work when it comes to that. And so individuals can see how you can purchase even properties with that scenario. And you can see that it wasn't all peaches and cream, for him to actually go out and do these type of business ventures. He did have some personal loss, as far as the credit and the bankruptcy, but that was a lesson lived, lesson learned type situation. And thank you for sharing that, Douglas. It's greatly appreciated. So I definitely, at this point, man, want to just, savor the delight and open it up for questions. We'll do questions for a little bit here, nothing too long, but I definitely want to open it up for questions. So, brothers and sisters, just know I'm going to play back and forth between the live chat on YouTube, and then on the back end of that, if you all want to press one on the blog talk, you all can do that. The number to call in if you're on YouTube to actually talk live is 424 222 5250. You all can call in and press one. And these are the type of things that I build with individuals in on the private about. And this is how your money stays private. Just like Douglas said, the IRS doesn't really know what you're doing with these policies unless there's a certain maximum threshold that's actually met. So it's very important for you ought to know. I mean, Douglas, is this true that you can't even you're not even able to have a certain number of you're actually capped at having a certain number of policies on yourself, that after you have a certain amount of value on yourself, you can't get even more than that? Or is there no limit to how much death benefit or value that you can actually have on yourself?
Yeah, I mean, there is based on, because everything is based on income. Because the last thing the insurance company want is you start a policy and you can't afford it. So you got to make a certain amount of income, to be able to put a certain amount of money on yourself. For example, if you're making $20,000 a year, you're not going to be able to get, a $2 million life insurance coverage because I mean, because they look at your income. Now, term insurance they might sell it to you, but you might not be able to afford the plan because it's going to be too expensive because you're bringing $20,000 a year. So it just depends on the situation and the income. So, but you could get 10 times the amount of money you make. So if you make 20,000, you could get 200,000. The maximum we could get you is 20 times your income. You know, at least that without having the insurance company ask us for financial documents. When you start going over 20 times your income, then they want to see that you can definitely afford to do it because the lot you can't put that much money in it. So for business owners, it's very unique for business owners because a business owner, if you know, because you don't have a 401k, you don't have an IRA, so life insurance kind of makes sense for you to be able to put money in there for you that you could build on. So again, it's all about and your company can actually own the policy if you want them to. You the company because that's your company. You could own the policy. You could be the beneficiary of the policy because at the end of the day, it's going to go to the family. Your family is going to get it if you have them structured properly for them to receive the money. So there's ways to make it work.
All right, good point. Good point. So here's what we're gonna do, brothers and sisters. We're gonna open up the phone lines. We're not gonna stay on forever tonight. We do have an event coming up this Saturday, the 25th. Make sure you RSVP before Thursday. We just want to make sure that we're all good. We're gonna close it off on Thursday, brothers and sisters. If you haven't already RSVP, you can RSVP at hfrn period vault at gmail.com. And get the tickets and make sure that you're there. It is going to be in New Jersey. If you're not in that part of the country, don't worry about it. We're going to be making it a point to do events all over the country. So we definitely look forward to serving you all. But we're going to cater to the Northeast region right now. But we are going to open it up for some questions here. So we're going to go ahead and open it up. Douglas, you cool with that for a couple questions? Not too deep. Okay, cool. All right. Cool. Let me see. Let's just go ahead to this first person. Caller 718-4911. Peace. What's your name? Where you calling from?
Billy South from Brownsville. How you doing, Sharif? Yeah.
I'm doing well. How you doing?
I'm all right. I'm looking forward to see you this weekend. Um, you know, with the brother, he's gonna be here too. The insurance brother.
No, with Douglas, and Douglas is just more of a private consultant right now. He's somebody that we definitely will be bringing in more on a personal basis. Because when you're dealing with this type of stuff, as far as insurance, it's more of a personal thing. With the presentation and just making sure that you're all taken care of. But just look forward to it in the future, though. Definitely, this event was kind of planned before some things happened, but at the same time, we would love to definitely pull Douglas in because he is someone that is sharp enough. Douglas has a huge business, man. He travels a lot, so to get him on our calendar is an honor. Even for him to take the time out tonight for this hour period of time, is an honor to have Douglas aboard. So, did you have a question for Douglas by any chance? Okay.
Take the next caller, and I'll see you soon. Okay?
Hey, definitely. Peace and thank you so much. We're going to go ahead and move forward. Thank you, Daryl, for calling in. Always appreciate it. Alrighty, we're going to go to the next caller. We're going to go to 347 Peace, what's your name? Where are you calling from?
God bless you, gentlemen. It's a pleasure to be in on the community with this hearing this evening. I'm curious because you're saying that those that have 401ks and 503s, that if they remove those and put it into the life insurance, what about people that have health conditions, pre-existing health conditions, where the underwriters will not approve them, such as conditions like cancer, high blood pressure, smoking, HIV, AIDS-related? What happens with that community that has the large income that can invest in its insurance, but the underwriters won't approve them? What happens with that?
Yeah, so we're not saying take money out of 401k or do anything like that. But what you're doing is stop maxing it out. Now, for those people that cannot get approved because of their health, because your health is your credit when it comes to life insurance. Your health is your credit. So just like you have bad credit and bad health. So what we do, there's all these ways to make it work. For example, if you want to buy a house and you have bad credit, but your husband has good credit, guess what? You're going to use your husband's good credit to buy the property. So same thing if you have family members that, will allow you to insure them and have them do certain things, that works because again, you could borrow life is what they call. We have what they call a joint survivorship policy that you could have two people, even one is uninsurable, but the other person is insurable. So we use that person's life. The other person will be uninsurable, of course, because they have health issues, but they're not buying it because of the death benefit. They're buying it because of the cash value. Because now the cash value becomes the death benefit because they're funding the policy. You see what I'm saying? So you could put more money now because now, for example, if I was going to buy two policies, one and it was going to cost me just max funding it $10,000 for me, $10,000 for my spouse or my son or whatever. So that's 20 grand. But I can't get approved because of health issues. Well, I don't have to get it approved for me anymore. I'll take my 10 and give it to my son or to my wife or whoever. Now she has $20,000. She could buy a policy and put all the money, and both of us can own the policy. And we have access to the cash. So there's always ways to make it work.
Okay. I appreciate that information. Thank you so much, gentlemen.
You're welcome.
Thank you for calling in, sister. We appreciate that. And feel free to email us at hfrn vault at gmail.com. And, if you have any further questions, we'll make it a point to put you in touch with Douglas and go from there. Brothers and sisters, we definitely want to help. We're going to bring Douglas back on more of a consistent basis, too, as well. Douglas has a lot going on, but at the same time, we value the relationship that we have with him. And the biggest thing here on the Vault is we always want to make sure that everyone has their structure right. But at the same time, a lot of people always ask, well, I want to go private, and they don't know how to generate wealth, and they don't know how to actually finance things. They think that when you go into the private, they have a hard time financing things because just like Douglas mentioned earlier, that the public move on to the next caller. Take the next caller real quick. I'll probably take like one or two more calls here. Douglas not going to hold you up too long tonight. or today, wherever you are in the world. And we're going to go to 908 0419. You're on the line. Peace. What's your name? Where are you calling from?
Hey, Sharif, it's JB. Just want to say, great show. Thank you so much for this information, Douglas. Thank you. This is powerful stuff.
Appreciate it. No problem. You're welcome.
I mean, I'd love to, be able to consult with you in the private, but just real quick, like, you had mentioned like being able to like snag the extra cash from existing like IRAs and stuff like that, and possibly restructuring existing life insurance policies. So, like, is there any more you could say on that in the public?
Yeah, definitely. So here's the thing with the IRA and all those things. So why do people do it? Well, people do it because they feel they're deferring their tax, you know. But the problem with that is you're actually postponing the tax. So when you contribute to an IRA, you're telling the federal government, don't tax me today, tax me in the future. And the government says, sure, we'll tax you in the future. Put your money in that account, and you put all the money in the account. You make interest, so you're making interest on the account. A lot of people think all that money in that IRA or the 401k account belongs to them, but it doesn't, because a portion of that money you've not paid any tax on. Now the question is, based on what's going on in the economy, do we think taxes is going to be lower or higher? Everybody I always talk to say it's going to be higher. So once it's time to retire and you want to start drawing that income, you got to start paying taxes on all that money. Now, with life insurance, on the other hand, again, you tell the insurance company, I want to put money in my insurance policy. They say, okay, sure, how much you want to put in? I want to put $1,000 a month. All right, that $1,000 is coming from money that you've already paid taxes on. Remember, when you're putting money in a 401k, you've not paid taxes on it. So the interest you earn, you haven't paid taxes on that either. With insurance, you already paid the taxes on the money you're putting in. But the key, though, is the interest that you're earning. You don't have to pay taxes on that. It's deferred to the future. Now, when you want to take it out, you take it out in form of a loan, tax-free loan, because it's a loan. The IRS cannot tax you on a loan, just like a credit card. You could have a credit card for $20,000, and you could take out cash of $20,000. You don't pay taxes on that credit card. You only pay interest on it. So the insurance company will say, we'll give you the loan, $10,000, but you're going to pay us interest, let's say 4.5% interest. But your $20,000 is still making money like you never even touched it. So that's how it works. But so many people don't understand it, because the agents don't teach it to the clients properly. They make us feel like life insurance is just a bad thing. And, don't put all this money in there, because of course they're going to say it's a bad thing, because they want you to put money in a 401k. They want you to put money in a savings account. Well, once you keep putting all that money in there and it's time for you to get your money, the problem is money, and people don't talk about inflation either. $1 today and $1 in the future, two different things. And you hear so many financial advisors tell you, well, once you retire, you need to live off of 80% of your income. Well, what do you mean? So if I make $100,000 today, 2017, $100,000 20 years from now is not going to be 100,000. How can I live off of $80,000 20 years from now when I'm struggling living off of 100 today?
Makes perfect sense. And you also mentioned the mortgage, like most people's mortgages are not structured properly to.
So the mortgage. The problem with real estate mortgages is this: it's your house. Look at it as a house. It's not an investment. Why do I say that? Well, you've heard to pay extra payment, make extra principal payment on your mortgage. So if your mortgage is $1,000, it will pay an additional $500 so you could pay it off quickly. Why would you want to do that? When you pay an additional $500, how much interest are you making on that $500 on the house? Zero. You're not making any interest. Your equity in your house is going to appreciate just like the same equity the guy next door is, because the equity in the house appreciate the same in the neighborhood, right? So when you put that extra $500 in your house, when you need money, can you go get it? No, you can't go get it, because you got to go back to the bank and beg them to give you money. And then they're gonna want to see your paperwork. They want to see your credit. They want to see everything. They could come back and say, you know what? Right now we can't give you the money. Sorry. So what I say is take that extra $500, put it inside your life insurance policy, your casual life insurance, while you're paying your mortgage of $1,000. The key to wealth building, there's four, I call it four C's. Four C, C for Charlie, that you want to always remember. The first C is collateral. You want to be able to use your money as collateral. So I call it collateral capacity. The second C is control. You want to be in control of your money. The third C is cost, opportunity cost. You want to be able to, for every dollar you could have used, but you end up spending that dollar. Imagine how much you'll be worth in the future. And the final C is compounding interest. Compounding interest, and I call it uninterrupted. That means when I'm making money on my money, I don't take it out, because if I take it out, it's interrupted. So a bank, a mortgage, the money is not compounded. You're not getting compounded interest in your mortgage. You don't have control of your money in the mortgage, and you cannot. You could use it as a collateral, of course, but it's again that equity doesn't belong to you. It only belongs to you if you refinance the house or sell the property. If not, if you run into a financial hardship, you could lose the house and the equity. See, the bank is not no any financial obligation to sell your house for the equity. Those sell it for the amount that you owe. So a guy like me that has cash, I could buy the house off at the auction on tax lien. You know. So why are we putting all our money in the mortgage? Don't finance your mortgage for 15 years. Do 30 years. If they have 40, finance it for 40 years. Do the longest amount. Use other people's money. Use the bank's money because they're using your money. So those are some things that, just a different mindset. You just got to change it a little bit, because most people, we've been doing this forever. And we've been, they've used the TV and the media to, brainwash a lot of us. And, people just do what they tell them on TV. So I don't watch TV.
Absolutely. I'm with you. You're speaking my language, brother, because ever since I've been learning what I'm learning, I kind of feel like the term saving and spending in the nature of our money system needs to be thrown away and replaced with hedging and investing. And that makes perfect sense with all this. And yeah, thank you. Yeah, really, thank you. It's very valuable information.
Thank you. Welcome.
Thanks, JB, for calling in. Look forward to seeing you this weekend. As usual, man, I got some good times again. So we'll thank you so much, and I look forward to talking to you, man. Peace. Alrighty, everybody, we're going to open it up for one more call here, and we're going to move forward tonight. I just thank everybody for tuning in live on YouTube. We didn't even have too many questions off of YouTube tonight, so if you guys are live on YouTube and you have a question, feel free to chat into the live chat, and we can engage there. But we're going to take some more callers here on the line, 424-222-5250. Press 1. Going to go to the next caller, 717-0900. Peace, you're on the line with Sharif Ali. Welcome to the vault. What's your name? Where are you calling from?
Hey, how you doing? I'm calling from Harrisburg, PA. How you doing there, Brother Sharif and Mr. Douglas? How you guys doing today?
Doing awesome.
Thank you for giving me the opportunity to talk with you guys. I spoke with you before, Sharif, on another issue that I had. I've been trying to contact you, but I'll just speak about that at the end of this question, this comment I have for Mr. Douglas and yourself. You were talking about as far as, making these investments or making these here purchases through your private funds, through the life insurance. But you were saying not to be involved as far as doing it through the savings and the accounts with a bank. Well, I had been involved with a bank for about 5 years. And now I did drop my first previous marriage. I dropped my life insurance. But the bank has took it upon themselves to come to me and ask me if I want to join them in a life insurance policy. I mean, the deal sounded great, but it sounded too good to be true for myself. So, I just inquired for them, asked me to send me the paperwork and things like that, which I never got, because I have no reason why, or don't understand why. Maybe just didn't get around to me. But my issue I'm having here is that, first of all, it's probably a two-part question. Is that a good idea when your bank offers you a life insurance policy?
Yeah, the banks, one, the insurance that they offer you is term insurance, group term. It's probably like $1 or something like that. I mean,
Yeah, yeah,
yeah, that's group term. You can, I mean, whenever. So that's not the type that we're speaking of. The one I'm talking about is a permanent life insurance, cash value life insurance policy. You know, um, and you want to. The reason you use it, so you gotta always remember if you're going to open up your own bank, and I have a ton of videos on my website, lagofinancialservice.com, and also on YouTube that we've put out. So you can always watch videos that I explain a lot of this stuff on. And I have a book that I wrote called Creating Generational Wealth. I also have videos on there you could read. It's on Amazon. But once you create, if you're creating your own bank, how much of your money would you put in that bank?
probably at least half of what I own.
Exactly, because that's your own bank. I mean, you're setting it up. That's your bank. So that's the same thing with the life insurance. You're setting up your own private savings account. You're putting your own. This is your own private savings, your own private pension plan. Those things. So you're gonna put as much money as you can in there and use it as that. So it could work for you.
Right. I understand that. Okay, that makes a lot of sense. My second part to that question would be if I did, as far as the whole term or the whole life insurance, purchase that, and what is the maturity with that, or how long would it take for a process, or is it because I bought the insurance? How long would it take for a process like that for me to even begin into a venture like this, to be more a little bit secure for me and my family, just to make sure that I'm not getting. I'm not going to use the word railroad, but you probably know what I mean when I'm saying it. But just not being taxed at the highest form, being involved with an institution like this.
So the maturity of a life insurance contract is for lifetime. Now, to use it for a bank for yourself is this: once you're max funded, if you're putting in, so for example, if you only pay the minimum in, it's going to take a while before the insurance company say we're going to give you our money. It's going to take because you're just paying the minimum. So out of your minimum, 400, like using the example of $1,000, $400 of your money is paying for the life insurance. Let's say the coverage is 100,000. Now the other $600 is what they are applying interest to. So there's not enough money in there the first year, the second year, because the insurance company, you have money growing because you're making interest on 600, but you just cannot take money from the insurance. You don't have enough collateral for the insurance company to give you their money. So you're going to see this when you call them and say,
yeah,
exactly.
I'm sorry.
Now,
this way.
right. So now when you max it out, when you're doing the maximum, again, let's say now you're putting in 5,000 in instead of the $600. Now you're putting in additional $4,000 to make it 4,600. Now the insurance company says, okay, now you're using this like a bank. You're using it like a bank. So we're going to loan you some of our money. And based on the plan, it just, they'll say, okay, we might be able to give you your first year if you want it. We might give you $1,000 against your 4,000, and then it gets bigger as the years goes. After 10 years, you could take out everything that you have in the cash as a loan. Basically, you could borrow from the insurance company all the money that you have. So they'll give you up to 80% of the money in the account to use for whatever you want to use it for.
And the other 20% would be the part that they would be taxing for the interest, or actually what they use for themselves to make the interest.
No. The other 20% is just sitting there because, again, you still have the death benefit to make sure that just in case something happens, your family still gets the face amount.
Oh, okay. So very clear, very clear. So if it does happen, and I don't go through the whole procedure, and this, God forbid, that before that time or that term does come up, it's an issue purpose will still be
exactly. Yes.
Okay. I see that. I understand that. Well, thank you, Brother Douglas, for answering that for me. Brother Sharif, I'm sorry. I appreciate that, Brother Douglas, again. But
No
Brother
problem.
Sharif, I've hit your website. I've hit your email. I don't know. I just haven't got in contact. I did get a phone call. I mean, I did get one response, and I did show that I was trying to talk to you, brother, but I never got nothing else back. And I don't know if maybe if you don't mind, but I can repeat my email address to you. So maybe if you get a chance, I know you're probably getting a ton load of them, and they're not, probably getting to you or as fast as this because you're busy. But I really wanted to get a chance to get this one-on-one with you, so that I can get into this private as we talked before about a month ago when I first got into this issue here. And if it's possible, man, I just want you to look out for it. I'm gonna say it anyway. It's J.
You're
That's my email. I sent you at least 4 or 5, man.
Nah, you're fine, man. You're fine. You're fine. Just send another send. I definitely. I mean, I have people that look over the emails, man. But you definitely are fine. We can make sure that it's taken care of. That's a rare occasion, man. I want to make sure that you actually have the right email. And even if you go to the website at welcometothevault.com, those emails get answered as well. But HFRN, which is like High Frequency Radio Network, period vault vault at gmail.com. And nah, man, you shouldn't have an issue with that. And if it is, I sincerely apologize for that, because we're one of the best at that in the business as far as answering emails, man. That's we do get a lot of emails. It's one of our major correspondences, right now, for people to contact us because of the privacy. So we definitely want to make sure that we're good there. And I thank you for that. So.
This show, I'll be after I'm done listening to everything. I'll hit you straight, and maybe we get a chance that we can communicate. All right, and thank you guys. I really appreciate it, and continue to bless the folks out here and give out this knowledge, guys. It's very valuable, and to those that don't know, it's not valuable. And nothing beats a failure but a try, guys. So do that.
Well, thank you. Thank you so much for tuning in. I really appreciate that. This is what I do it for. I do it for our brothers and sisters educating themselves and instead of just entertaining themselves. So thank you so much. All right, brothers and sisters, we're going to go ahead and wrap it up. I know we got about 9 minutes left. I'm going to go ahead and wrap it up here. We got a couple questions, though. Real quick, Douglas. Someone said, it was one question I want to address conscious ether on the YouTube chat. They asked, will we be doing a recording of the event on Saturday? And once again, brothers and sisters, I'm going to repeat this so you all can be very clear. The event is private. If you are not able to make it, that is just okay. We will have events in the future, but they are not to be recorded and sent out. We don't do that at these events. This isn't entertainment. Once again, it's an investment in yourself. If you want to go get a Harvard education, you got to go to Harvard. You can't just get the recordings that our buddies send to you through an actual recording. So it doesn't work that way. So we definitely look forward to seeing you at the events if you can make it. The next question is so would it be unwise to invest in a home equity loan? Someone said this, Douglas. They said, so would it not be wise to unwise to invest in a home equity loan into BOLI or bank-owned life insurance?
I mean, when it comes to when people come to me and say they want to put money in something, the first thing I want to do is find out the source and how we're gonna what else we're doing. To just say take your money out of your doing home equity line of credit and pull money out of that to put into life insurance, without seeing your whole financial picture, it'll be very hard for me to give you advice on that. To tell you to do that. So it's not something that we're going to say pull money out or go get a line. Because remember, a line of credit, the bank can call that loan anytime. So we need to make sure that the money that you're putting into a life contract, one, has to be money making that's income. That's coming from a source that you're making money from. And I mean, and then second, we gotta make sure because there's laws and stuff like that you gotta make sure you follow. Now when you pull equity out from your house, which is, if we you pull equity out to do certain things or whatever. If you decide that some of the you finish using it for what you're using it for, and you still have extra money left over, and you're like, okay, I don't want to put it back in the bank, and you want to put it somewhere, then we want to talk about how to make sure it goes into the right vehicle for you. That's safe and is protected. So but we have to go through a process. My thing is I like to teach you how money works before telling you to put money into any financial product, because I need you to understand why you're doing it, and I need to understand why you're trying to do it or what you're trying to accomplish, what your goal is. Because if it's money that you're going to need 6 months from today, I mean, that's not what we do this for. I need to be able to show you properly what to do and how to use the money correctly.
Thank you, Douglas, for answering that question. We do have one more question before we wrap up here. Someone says, "Are there any bank-owned life insurance carriers that you would recommend?" And this came from Live Lo-Fi on YouTube. So, is there any bank-owned life insurance carriers that you would recommend?
Well, we have about 300 different companies that we use. So once you reach out to us and we see what situation your situation is, and we could look at the different ones and see which one makes more sense based on what your situation is, because we have a lot of companies, and some of them, have living benefits and some of them don't. There's some benefits that in there that, if you get sick, they actually they start contributing the money for you. So there's a lot of companies. We're not loyal to one company. We just look at the ones that have benefits that make sense, that are flexible, that you can use to do what it is that you're trying to accomplish based on your age, because age also plays a factor in the type of plans that you're going to get. And we do all kinds, not just permanent life. We do everything, universal, whole life, term, index, all kinds. So we make sure that you understand what it is that you're getting yourself into first before you get a plan. We don't just rush and sell you something.
Thank you, definitely for addressing that. Douglas, I know that this has been probably one of the best episodes we've had in a while. I think I bring the wood every week with brothers and sisters as far as educating them on the private. But I know that there's always a big concern for individuals that want to know about private financing. They always hear about private equity and things of that nature, private funds, public funds, but in private money, but they don't know how to maintain their privacy with trust. And so I really stay on the structure aspect. But I do appreciate you coming in tonight and talking about the private financing aspect of it. And I do look forward to you serving the clientele and brothers and sisters actually reaching out to you. Brothers and sisters, Douglas is on Facebook. It's Douglas Easy. If you all want to search for him, it's, traditional Douglas, spelled Douglas, and EZE is the last name. He does manage and own Largo Financial. Is it Largo Financial Group? Okay. Yes. Yeah.
Financial services, and also creating generational wealth. Um, that info and .com. So we have that website, creating generational wealth. That's the name of the book that I wrote. What the super wealthy know that you need to know. So it's on there, and on YouTube too. We have a YouTube page. You could definitely subscribe, because I have a ton of videos that we've uploaded. There's one called "Your Financial Advisor is a Liar." Put it out there. There's one on children, how to grow wealth for your kids. So I have a ton of videos on there to kind of help you, break all the lies and the myths that's out there, especially when it comes to life insurance, because people are getting the wrong information. So we want to make sure that you're properly educated on it. So before you buy any policy, you need to know exactly how it works and use it for your family's benefit, because it just makes sense.
Awesome. Thank you so much, Douglas. And brothers and sisters, like you say, a lot of the strategies that Douglas talks about are utilized for private individuals that have trust in place. So I know that that's something that you all may want to go to Douglas with more of that grasp inside your hands before you actually just go and start doing things in your quote unquote in your name, brothers and sisters. The vault is all about own nothing, control everything. These policies, once again, are supposed to be set up with entities in place. They're not meant to be set up with you all just going out there and saying, I'm gonna go put an insurance policy in my name and do things like that, brothers and sisters. If you think that that's what you're supposed to do, have fun with your journey. But at the end of the day, there are things that me and Douglas practice, and other private individuals that focus on maintaining privacy, own nothing, control everything. You don't need to own the policy to have the policy on you. So that would mean that you would still need to get in contact with us at the vault here and make sure that you actually have those structures in place. And that's something that we can all collaborate on, and then send you right over to Douglas and make sure that you can start financing things through a private wealth strategy, because it's a private wealth strategy for a reason. It's not one of those things that you're just utilizing these things to still maintain your public status. And if individuals want to do that, so be it. But brothers and sisters, I'm here to serve individuals to maintain their privacy. I'm not here to help individuals stay in the public, own everything, and be liable for everything. Just because we're talking about insurance, which still is in the public to a degree, once again, it is a private wealth strategy. When you heard the definition of Investopedia and what we talked about tonight on the topic, this is what private individuals use. So it encourages you all to get to our private event here on June 24th. Once again, the email is hfrn.vault@gmail.com. If you all want to find out how to make sure that you have your trust structure set up and get into private trustee training, you all can contact us at hfrn.vault@gmail.com. This is probably one of the more busier weeks with us right now with this event coming up here, but we're still going to make sure that we serve you all in the furthest and best capacity possible, and we look forward to serving the community. We do have a team ready to serve you all, and that's the most important thing. And we do have a community that's looking to welcome you all with open arms. You're going to be able to meet other trustees that are managing their family estates, and that's what it's all about. Like I say, this information is passed along through private families or private communities, and if you think that you're just going to be able to YouTube everything, that's just not going to happen that way. So if you think that you're going to be able to get your private education on a public platform, have fun with that journey, brothers and sisters. But it doesn't work that way. This is something that individuals have to make a lifestyle, and that lifestyle is going from the public to the private. So we look forward to seeing you in the private. I thank you all for tuning in live. Thank you, Douglas, for coming through. It's been a blessed night, and I'm sure brothers and sisters have been enlightened to some new information, and I look forward to you all connecting and putting you all together. So thank you so much, Douglas, and peace and blessings.
Welcome.